Hey Rent-A-Retires, it's Adam Schroeder here with another video, and today we're going to talk about why rents lagging appreciating prices is good for the real estate investor. Before we get started with today's video, let me remind you all once again, please subscribe to our YouTube channel, click the notifications bell, make sure you don't miss any of the content that we're putting out to make you the best investor you can possibly be. Also, at the end of the video, if it's been useful for you, please click the like button. Leave us a comment if you have any thoughts about the video, any questions about the video, or if there are any other topics you'd like for us to discuss on this channel. So let's get into it. Why is it good? Why could it possibly be good for rents to lag prices if you're a real estate investor? Well, the answer is pretty simple. As home prices go up and rents don't follow, it makes rental properties less attractive to new investors because they're not seeing the numbers that they're expecting to see, that they've gotten used to seeing in the market. Now, how is that good for you as an investor? You think, wow, so I'm going to get the same terrible returns that they're passing on? No. Well, the first year you might, but you have to look beyond the first year. This is what we're trying to teach you here at Rent-A-Retirement, is you can't just look at year one. You need to extrapolate across years, across the time horizon. You need to look at your rent 2 years, 3 years, 4 years down the road. Look, we are seeing crazy appreciation in most markets across the United States. That may not seem like the best time to be buying an investment property, but the truth is, because you can only renegotiate your rents once a year and rents are lagging behind, you're seeing, year over year appreciation at 15% and year over year rent growth at 6, 7, 8% in a lot of markets. So what does that tell you? That means that eventually the home appreciation is going to slow down, but the rents are going to be steadily climbing behind. I advocate, I beg you, every year you should be raising your rents. Think about it. If you have a renter who's there, are they really going to leave because you upped your rent $25 a month? No, nobody's going to move for $25 a month unless your rent is already astronomically high and not able to be priced in by the market. Maybe they'd leave then. But for $300 a year, very few people are going to go through the process of actually moving. No, they're going to stay there. But you need to get them used to the rent hikes. Because if you wait 3, 4, 5 years before asking for a rent increase, they're going to wonder what's going on. I thought Adam was a cool landlord. He wasn't raising our rent. We've lived here forever. Why is our rent rising now? No, you want to condition them every year. You're raising your rent, even if that's just 1%, 2%. But in today's market, you can get 4 or 5%, maybe 6%. In some markets, we're seeing 10%. But even in the markets that we're seeing 10%, the home prices have increased by more than that. So you've got new investors looking to come into the market, and they're seeing these terrible returns, and they're wondering, why would I get into the market now? That's why they wait for the crash. They're waiting for the crash because they look at the numbers and think these aren't sustainable, not realizing that rents are following, and it will make their returns that much better. And if you look at your return, let's say you're getting $300 a month cash flow and you can up your rent $25. Well, suddenly you've upped your rent, 1/12? Or your cash flow is up 1/12. So that's suddenly an 8% increase. And for $25, that might only be a 2% increase on your overall rent. So you're looking at astronomical returns when you factor in leverage and when you look at your actual cash flow. So as an investor, you need to be expecting maybe not so great a return on year one in fast appreciating markets, but look out. See what's going to happen in the future years. Look at all of your rental properties. Just say, what would my returns be if I raise my rent 3% a year? Just 3%. So on $1,000 a month rent, I'm asking you to think about raising your rents by $30 a year. That's it. Well, hopefully more, but at a minimum, $30 a year. Is somebody really going to move out for $30 a year? No, they're not going to. So $30 a year. You think about 5 years down the road, you're now looking at least $150 more a month in cash flow that property is bringing you in. You extrapolate that across 10, 15, 20 properties, suddenly you're starting to talk about serious money. This is something you have to be doing as a real estate investor, and something not enough new investors are doing. New investors are just looking strictly at the price tag and saying, whoa, that's too high, I'm out. The rents in this market aren't sustainable for the price. Well, you know what? That might be somewhat true today, but they're not looking for the future, and we want you to look for the future. Look at what's going to happen, see how it's going to change, and you can see all of the benefits that are coming forward on these rental properties to you. So as a real estate investor, hey, these appreciating markets are keeping my competition out, so that's a good thing in some ways. And also as people don't move in and buy rental properties, you're getting homeowner occupied coming in and buying up properties, and that's helping the neighborhoods get better. So, it's really kind of a win-win for the real estate investor in this case. But I don't want you to be missing out on opportunities just because you're looking at the present day rents and the present day prices and not factoring in your financial future. So I hope that's helpful. I hope it takes a little bit of the stress out of your mind if you're thinking about buying your first rental property today. If you're already in the rental property game, you probably realize this is a beautiful time to be looking at properties. But if you're not, don't fear. Things are moving in the right direction on the rental fronts as well, and it's going to be good. I mean, if you look at all the fundamentals in the market, it's going to be good. So I hope that was helpful. Please click the like button if it was. Also, don't forget to subscribe to our channel, click the notifications. Don't miss any more of these videos. Check us out at renttoretirement.com. That's renttoretirement.com. You can find all the information that we provide there. You can find our contact information. If you want our property sent directly to your phone with the PDF, with the brochure that we put out on our website, go to renttoretirement.com/hotlist, and you can find all of those properties there. Thanks for watching, and we'll see you on the next video.